Hey guys, welcome to ETI and welcome to my channel. Now today I'll be talking a lot about trading plan, why it's important, how to build one and how to evolve one as obviously market cycles evolve and change. Now before I dive into that, I want to quickly take you through what ETI is about and why I kind of built ETI. So ETI is something that I've kind of made myself, which I can call myself as a founder of ETI. Now, ETI is a way I trade the markets. It's really not even the way I trade the markets, it's a way of life for me now, all right? The way I do my daily goals, the daily, the way I look at the charts, the way I trade, the way I do things in my life, it's all evolves around this, all right? It's not just about trading. ETI is about how life is to me, all right? So, that being said, primarily as a name for my strategy. Now, I'm not going to teach that here, or I'm not going to teach that into my Discord channel that I've got, all right? Because it's not going to be something that I'll be giving away. Because it's something that I trade, I'm making money out of it, and that's just going to get kept in the background. But what I want to give away here on this channel specifically is the good information, all right? Information that you guys need to hear, not what you want to hear like you do from other channels that are fake. What you need to hear, what can potentially impact your trading a lot better, what you can implement into your trading straight away after watching my videos, how you can make your analysis a bit better. Sorry, excuse my coughing. I've picked something up throughout last week's and it's still lingering. So that being said, I'm going to give all those sort of informations here: the psychology, goal setting, how to review your trades, my trade recaps, all those things, all right? This is going to be really one of those channels, or if not very few channels, that's going to keep it raw, genuine, and straight to the point, all right? I'm not going to make anything that's fake. I'm not going to give you guys the wrong information. I'm not going to try take something from you. Even my Discord channel is completely free. Now, I wanted to create that because there's not enough traders out there that are supported by like-minded people, all right? We all seem to be lonely when it comes to trading. Especially I was when I started trading. I was the only person from a Nepalese background that was trading within Scotland, or if not the whole of UK at this point. And I felt like there was really nobody I can bounce informations off except the people that were trading the same course as me, all right? So it can be lonely, specifically if you're from like an Asian background. So I wanted to create this Discord channel where it doesn't need to be from one community. This is why I'm a big advocate of this channel, all right, this Discord channel, because I'm not taking traders from like something the way I trade the markets. This is open to everybody, no matter whether you trade ICT or smart money or whatever it is you trade, all right, indicators or chart patterns or whatever it is. It's all open to everybody. I'm not looking at your strategy when you join. I'm looking for you to join and then interact with other traders, all right? Bounce informations, learn knowledge, learn from what other people are teaching you, or you can teach them depending on your experience level. And I wanted to build this community where everybody can hang out, all right? It doesn't need to be a specific strategy, because that's what we need within this industry, because there's very few of that, all right? And there's very less of it. So that's one thing. I've created that. Now, what I'm looking to do is, obviously, once we all have about 100 traders there, we've got about 30 just now. Once we have about 100 traders, I'm going to take the top 10 that are really serious, and then I'm going to teach them everything I can. And I wanted to do this all the time. What I'm going to do is I'm going to take them top 10, make sure they're committed, make sure they're active on my Discord and they're active within the channels. Take the top 10 and then give them my strategy. Teach them everything that I can, document this journey, and make them into a consistently profitable trader. Now, all 10 might not become a consistently profitable trader, but even if I can take one out of the 10, that's a really positive thing to have within my arsenal here, all right? Because there's not many mentors out there that can teach many students and make them a consistently profitable trader to a point where they become financially independent from trading, all right? Now, if I can even do that with one trader out of the 10, to me, that's a win, all right? And I'm looking forward to it, and I'm going to document everything as I move forward, and that's my vision overall. I think it's going to be great for you guys, specifically for those that are serious about trading, who have already been in the markets. Even if you haven't, then again, it's a great opportunity, because this might take a couple of months for it to all come together, and you've got enough time until then to showcase to me that you are serious and you want to learn and you want to elevate your trading to a point where you can become financially independent from trading. All right, simple as that. Now, let's move on to today's video. So, Today's video I want to talk about trading plan. Now I've been trading within the markets for 8 years now, right? And I was trading a course for about 4 years, and then I started I found this one specific pattern within the markets. Again, this all came from trading this course, all right? I started noticing this one specific pattern, to be exact, that I saw over and over and over again, to a point where I started making sure that, do you know what, I'm going to start recording this, all right? Every time this happens, I'm going to put a note in my folder. I'm going to take a screenshot and keep it in my folder and see how often this happens. And I kid you not, it happened more often than I thought. All right, and then this is when I kind of stepped away from that course, because I wasn't completely happy with what it was. Because I gave it enough time. Yes, I was consistent. I was break even, and then some month I was slightly positive. I was never in drawdown, and I'd never had a drawdown streaks of months. But again, I was just getting to a point where I was like break even and having a couple of % here and there, but I never really had like consistent months. And for example, a full consistent quarter, full 3 months in the green. I never had that, but I could deem myself as potentially like a consistent trader. And then after that, after I found this pattern, I went and bloody tested it for a full year. All right, that's all I done. I tested the thing, the bare bones out of it. And what I came across is ETI. Now, I built the strategy from the very, very early. Pretty much I built it myself. That's all I can really say. All right. And to me, because I built this myself, I understand this from the roots. And as simple as that. And I built a trading plan according to it, and I just trade the plan now. There's nothing confusing. There's nothing conflicting, and there's nothing difficult about the markets to me now. Everything to me is just numbers. All right. Every time a trade sets up according to my plan, it's number that I can put away into my plan, and put away into my ASR, put away into my kind of journal to say this is one more number into my arsenal. All right. And remember, within trading, we're just looking for numbers, enough numbers within our kind of trading journal to allow our edge to play out. That's all we're doing. So let's go into today's video, all right, which is again trading plan. Now, what is a trading plan? To me, a trading plan is a simple, very simple thing. Trading plan is what separates traders from gamblers. Now, someone who comes into the market, for example, buys a prop account or puts money into the market, they might come in and just chance their luck. What they will do is they'll come in, put money into their account, let's say a prop account, and they'll buy pound Aussie for no reason, right? They just like the way it looks, or they've just got this instinctive thought of, you know what, pound Aussie is going to go long. And that is trading out of emotions, trading out of impulses, and that's trading through the luck, and that's pretty much chancing it, which is what I call gambling. All right. Whether the trader B or the next person is a trader, all right? For example, I've taught them, let's say, I've gave them a strategy, they come in with a trading plan, they have a structural way of trading the markets, they've got very, very strict criteria on what to look for within a trade for it to be deemed as a positive trade that they can take, or a valid trade that they can take. And for example, they'll wait for these criteria to be met. Once it's met, they'll execute the trade and they'll move on. So this person A is just playing luck. Person B is playing odds, all right? They're playing the numbers. And why do we know that? Because remember, when I built a trading plan, or when you build a trading plan, you put odds in your favours by each specific setup of what you have within your trading plan. For example, your plan might have 3 different setups. Now, you've tested that to a point where you understand if this happens more often than not, I become a consistently winning trader. Because that's how odd numbers work. This is how poker players win poker, or become a professional poker player, because they understand what hands to play and how to play them. All right. Yes, everything is random, but they still become professional poker players because they understand the odds. They understand how to play the odds, and this is exactly the same in trading. Odds really is our trading plan. That is all our odd is, but we need to play enough numbers for that odd to play out. It's same as having a coin with 60% weight on the head side and then 40% on the tail side. If you flip that coins, maybe not a couple of times, but if you flip that 50 to 100 times, what you'll notice is the side that's heavier will show up more than the side that's lighter. And that's all we're doing. All we're doing is we're trying to put these odds in our favour. And that's what a trading plan does. All right. So to me, a trading plan is what separates traders from gamblers. As simple as that. Now, what does a trading plan incorporate? It should incorporate your trade criteria, all right? or for example, different setups within each criteria, your management rule and your exit rule. On my management rule, I've got two scenarios, one for low risk positions and one for high risk positions. And same for exit rules. I've got exit rule scenario for high risk positions and I've got exit rule scenario for low risk positions. And then I've got 5 criteria for my setups within my entry criteria. And every single criteria leads on to another. For example, I'll give you one and I'll give you my 5th criteria. All right. First criteria to me is, does the higher time frame give me any sort of indication on what it wants to do? For example, does it give me does it give me any directional indication? All right. For example, I'll give you an example here. Is the price at a double top? Yes. Has the price rejected on the daily? Has it got a high test or low test or retrace candle on the daily at a double top? This is an indication. It's a solid indication to say price has formed double top. It's formed a retrace candle. It's most likely going to go short. This is it's giving you an indication. It's not exact, but it's giving you a solid indication of what it most likely is going to do. And then what you do is, I'll move on to criteria 2. That'll need to be met for my criteria 3 to come in. That'll need to be met for my criteria 4 to come in. And then my 5th criteria, I've got a candlestick formation for me to jump into the market. I'll be looking for a retrace, a low test, high test, morning star, evening star, hanging man, doji, any sort of candlestick formation for me to jump into the market. So that's how they all interlink, all right? And every single criteria must be met for me to execute that trade. And then I move on to the management and then the exit. Simple as that. Now, for many traders out there, I know you don't have one, or if you have one, it doesn't work, because 95% of the traders lose end of the day, right? And if you say it doesn't work, then why is there only 95% losing money? What happens with the next 5%? All right, go and look at that data. So what I want you guys to do is, if you don't have one, make one. All right, I've give you what you really need to have in your trading plan. You need to have an entry criteria, management rule, and the exit rule. Those are the 3 things you must have, and they must have a solid rule-based system in there. All right, there shouldn't be any need for discretion. I'm saying don't have discretion, because that's a lie. You need some sort of discretion to stay in and out of the market, but try and minimize as much as you can of it. All right, and that's all you need to have within that plan. Now, for you guys who are very early on, you might find it very difficult to be able to build a trading plan, because to build one, you need to understand how market operates. You need to understand what market is looking to do. You need to understand how market behaves. You need to know something for you to build a trading plan. For example, for you to build 3 setups in your trading plan, you need to first find those 3 setups. You can't just pluck things out of thin air and say, I'm going to make a plan out of that. All right. So what I want you guys to do, if you don't have a course or a mentor or any sort of kind of trainings, lessons, sessions out of mentors, is go and find someone you can learn off, or find a course you can learn off, or find a strategy online you can learn off. What I want you to then do is get the strategy and go and test it, right? Back test it and find 50 to 100 setups, all right? Once you have, what I want you guys to do is take the things that really work and start putting them into criteria-based systems. For example, out of these 3 setups, I'm going to take the 2, and out of these 2 setups, for me to execute the second setup, I want higher time frame to be this way. I want my trend to look like this, or I want a solid trending environment, or I'm wanting my price action to be a high or a low, or I want at least some sort of candlestick formation for me to jump into the market. I need 3 to 1, so anything like that. All right, these are all criterias. There's so many criteria, I can't individually give you all of them, but those are kind of basic things. And if you go and look at trading plan examples within any sort of courses or communities, or for example mentors, they'll all give you a rough base anyway. All right, now, so once you have you've got some sort of base setups for your trading plan, what I want you guys to do is build the criteria, like I said, build a management rule, what you're going to do when you get into the market. For example, how you're going to manage it. Is it going to be a low risk position? Are you going to manage it slightly more leniently? And then if it's going to be a high risk position, are you going to manage it more slightly risky, slightly aggressively, like me? All right. And then your exit scenario, are you going to set a TP? Are you going to manually trill the stop? These all need to be within the trading plan. All right. Once you have this, what I want you to do is, once you feel solid, is take this trading plan, all right, and then go and test it in the back testing scenarios again. All right. Now, back testing doesn't make you consistent. What I'm giving you is it gives you sort of a trust building scenario where you can see your plan play out. Now, I can guarantee you, although it can play out in the back testing sessions, it will not play out very early on when you test it live because there's more emotions involved. But I want you to bear with me here, all right? When you test it in back testing sessions and it works, you're ready to go. Next thing is to test it live. When you test it live, use 0.25 or use 0.5% risk. All right, don't go with full 1% risk because you're testing something that you don't know as of yet very solidly, and it's something that's very new that you're applying into the market. So again, avoid drawdowns, all right? What I want you guys to do is every time you execute a trade, it must be according to your plan. And every time you do execute a trade, you need to journal it. The raw emotions, I'm going to give you a sort of template for your ASR here, all right? So I want you to take the trade, the symbol name, the date, the direction, the risk appetite of it, is it high risk, low risk, and the returns of it, all right? And what I also want you to take note of is psychology at the point of entry, all right? So every time, yes, you're going to be slightly biased anyway. You're going to say, like, if it meets my plan, I executed. But what I want you to, I still want you to, whatever thoughts you had, for example, even if you had conflicting thoughts, all right, should I take it, should I not, is it right? Write those down. You might have had those thoughts and executed. If you have, write those thoughts down, all right? So psychology during executions, all right? Take a note of that. And then once you've entered the markets, once you're out of the markets, what I want you guys to do is write your management, how you managed it, and if there's anything that you need to learn. And then on the weekends, this is important because I don't want you to do the full ASR on the weekdays. On the weekends, I want you to sit on your computer or laptop or phone. Ideally, it's a computer or laptop. It's slightly easier. I want you to go through your trades that you've taken and then ASR them, all right? Go through them. Have you stuck to your plan? Is it the correct risk appetite? Is there anything that you can learn? Is there something that you missed? Is there something that you've jumped to early on? Is there something that that's repeating from previous trades? All right, is there a mistake that's repeating? There's so many things that you can learn, and you need to start refining these things, all right? And if there's something that you picked up on, I want you to make that tweak into your trading plan, all right? Not straight away. I want you to grab enough data to say, right, do you know what? I really need to start implementing this slightly differently. Because just because you take one trade, don't start implementing that in the trading plan. All right, I want you to take 20, 30 trades, and once you start seeing a pattern that's happening over and over again, that's the point where you realize, you know what, I need to start implementing this into my plan and make it slightly better. Those are the little tweaks that make your trading plan better as the time goes on. And once the time goes on, once you're happy with your trading plan, and once you start seeing you start bringing in results, this is when your psychology gets cemented. This is when thinking in probabilities becomes a thing. Right? Until this point, maybe you've been scared to execute a trade because you think, what if I take a loss? What if I do this? To me, last week I took pound Aussie, right? That's 2%. I set the entry at 12. I forgot the entry, not in a way that I genuinely forgot it, but I set the entry. I accepted I could take a loss and I moved on. All right. When I checked the charts again around 2-3 o'clock, it pretty much tanked, and I was running about 5%. All right. Because it was such a harsh price action, and it was a Friday, I locked 2% in because I didn't want price to pull back and tag me out for break even. And then eventually what happened was they actually pulled back and tagged me out for 2%. And I was more than happy. But that is the level I want you guys, your psychology, to get to. And that all comes from a trading plan, all right? It's not any other ways. I can't teach you psychology. The psychology cannot be taught. That is, to me, that it's just not possible, right? Until you get to a point where you start building a plan, you've got a plan, you execute your plan, you understand your plan, you trust your plan, you start execute, you start having this data that collects, and you see that more often than not, it wins, it brings you returns. That's when everything becomes so clear in your mind, and that's when that light bulb goes to say, do you know what, I just need to trust my strategy. All right, this is when even taking 3-4 losses doesn't bother you, because you understand that your plan wins more time than it loses. And it can just be that there's been a bad sequence and you've taken three losses in a row. It can be possible, right? Nothing is a guarantee within the market. Just because you've got a plan that works and is bringing in more money, bringing in more returns than it loses, doesn't mean it can't have its flaws of having 3 or 4 losing sequence in a row. That's just how probability works. Sometimes you get 3 winning trades in a row. Sometimes you take 3 losing trades in a row. That is nature, all right? Now, only time I would double think about a plan is if you're taking more losing trades than you're winning. But at the start, that's going to happen. That's a byproduct, all right? But this is when I'm saying you're consistent, you trust your plan, it's working, and eventually it gets to a point where you start kind of not making as much, or your returns start to go down. That's when you sit together and go, do you know what, is it the market conditions, or is it the plan, or is it something that I'm doing? All right, am I deviating away? Has the market changed? Is the market potentially slightly slower? All right, is there something that I need to add into my plan? Is there something that I need to remove to my plan? And that's when you start reverse engineering. But that is how you build a solid plan. And without that, I'm afraid to tell you guys, trying to understand psychology doesn't mean anything, because it just doesn't. All right, yes, people will say, do you know what, when you take a trade, you need to think in probabilities. You need to accept the risk. Someone might say, okay, that's fine, I'll risk 1%, and then I'll go and understand risk, and I'll think in probabilities, and I've accepted the fact that I can take a losing trade. But then you take that loss and you're like, oh, why did I do it? Is there something that I've done wrong? Is there something that I've missed? Could I have avoided that? That's not thinking in probabilities. Thinking in probabilities is what I've done, right? I'll give you an example. This was before my pound dollar position, which was not the second last, but third last position that I took, right? That was Euro CAD. Don't count me on it, but it was Euro CAD, and it was one of the most perfect looking trades, and it just happened to be a loss, all right? And I sat there and I admired the trade, right? And I still do. Every time I go back to my journal, and I go back last month and I'm looking at the trades, I sit there and admire how good that trade looks, right? I don't care whether it was a loss. That does not bother me. But it's a fact that it met the criteria so well, to a point where I just understood that even if this trade loses, you know what, I'm happy, because that is a perfect scenario. And if I execute these trades more often than not, I'll become a winning trader. And that's the level of confidence I want you guys to get to. All right, that is probability at its best. Understanding you can take a trade and lose at the same time. Understand you can do everything right but then be wrong at the same time. This is all part of trading. All right, this is all trading psychology, and this is all probability. So hopefully this has made sense. Now, like I said, as time goes on, as market evolves, you need to evolve your plan, but that all comes from doing your ASR, all right? Every time you do reviews, every 20 trades, what I want you guys to do is you sit down, look at your trades. Is there something that you miss? Is there something that you can add to maybe implement that might make your trading a bit better? Or is there something that you can remove that can make it better? Again, these are all just evolving, all right? Market cycle might evolve. Some cycles might be slightly slower, and then you tweak your plan in a way that kind of suits that market cycle. And sometimes it might be impulsive. It might be in a solid bull, a bear run, and you need to tweak it according to that. All right, so but that's just, again, comes as market evolves and your trading evolves and you evolve as a trader. All right, so guys, hopefully this has made sense. If you do want to join my Discord, I'll leave a link in the description below, and feel free to join. It's absolutely free. There's already 30 people there, and I post there pretty much 2-3 times a week. All right, sometimes there's more, sometimes there's less, but on average I post typically around 2 to 3 times a week, giving you my breakdown videos, psychology videos, potential templates that you guys can use, and just hanging out with traders. I jump on calls and I help traders out. Again, I'm not helping them in a way that they're trading the strategy, but they talk psychology to me. They talk about goal setting. They talk about how they can improve. They talk about how they can deal when they're going through drawdowns. So these are all little things. And if you want something like that, feel free to join my community. I'm more than happy to welcome you there. The only thing is, don't swear, don't violate the rules, don't discriminate other players. Don't discriminate other traders, and just become a friendly person. Come, be committed. And obviously after 100 people have joined, I'm looking to take the 10 traders onwards, the 10 that I think are the most ready, the most hardworking, the most committed, and you might be one of those lucky ones, and you might be able to elevate your trading. That's on your part, all right? I'm not gonna force you to change something, all right? Like I said, when I take these 10 traders, they're gonna learn the way I trade the markets, right? Some of you might not be happy enough doing it, and that's fine, all right? You can still trade the way you're trading. You can still be part of the community. I'm not going to say you rejected my offer and I want you out of my community. That's not the way I want. If you want to trade the way you're trading, that's fine. If I select you and you don't want to do it, that's absolutely fine. You can still hang around. You can still talk to other people. You can still reach out to me. I'm more than happy to help. That's all trading is all about. Guys, hopefully this has made sense. If you've got any other topics that you want me to discuss in the coming videos, feel free to comment below. Other than that, trade safe, and we'll see you on the next video.